All right, this video here is kind of going to be twofold discussion or topic. More so, just very briefly, it's in reference to two things. Cutting losses, which I did a detailed video about that yesterday, showing pretty much how I go about cutting losses on a daily. You have to be able to do so, or you're going to incur some major drawdown, and you're going to blow your account. Simply put, all right. People always send me the same message. I see the same problems and comments being posted about people saying they've blown their account several times and they just can't figure out what it is. Well, I mean, a lot of times is you're just simply over trading. You're taking way too many trades versus simply waiting and being patient. I mean, patience is everything. You know, if I was to really pick out two things that are important in trading, is one, figuring out the direction of the market and trading accordingly based on what the overall direction is, whatever which way it's trending. And then two, patience. You know, you have to be able to sit back and stop taking every single setup that looks like it's the gravy train for you. And it's a lot of times it's not. You have to look at things from a broader perspective, and I talk about that. You know, scaling out, looking at a bigger picture perspective, which way is the market really trending? Because you could get caught up to where you think that you're taking a trade in the right direction. You know, if the market seems to be appearing to you as trending to the upside, but you're looking at things just from a more narrow perspective on a lower base chart and not looking fully out to see which way it is kind of globally moving or shifting to the upside or downside. So what you're doing is you're taking trades against the overall grain of the market, and you want to be moving and taking trades in the direction. And I talk about this for people who are specifically trying to be consistent or find consistency in their trading and want to be profitable. I know everybody's urge is most people wants to do, they want to do this on the full time. They want to find a way to be able to work from home and make money, because you see so much discussion and talking about and people showing their glamorous lifestyles. You know, whether they're living that way or not, who knows, okay? I'm a very humble person, and I'm not simply trying to glorify my means of how I live in any specific way. My basis here is to really just show you how I trade, not pushing anybody or forcing anyone's hand to trade like me. But I feel like this in life: if we have something to share and it is working, then share it with other individuals, because, you know, those same individuals, same people out there that are searching for the answer to, you know, specifically how someone may trade and be profitable. So that's what I'm doing, is just sharing how I trade. You can take it for whatever it is and twist it and make it your own. That's up to you. But if you really want to find consistency in your trading, you're going to have to cut your losses, all right? And I'm talking about cutting them ahead of time, so you're not, you know, really taking any major drawdown, because in this business, it's all about preserving capital. You know, that's the most important thing, because if you cannot preserve capital, then all you're going to do is blow your account. Whether you are, you know, trading with a cash account of your own, in your own funded personal account, or you're trading, you know, a prop firm way. And, you know, I don't trade prop firms, and nothing against them, but I just don't know the ins and outs about them, and I'm not interested in trading them, because I've been growing my funds for years now, and I've been trading for 13 years now. And I talk about the story, my backstory. The first 2 years I wasn't, you know, successful, but I didn't blow a bunch of money neither. You have to know, if you're struggling with cutting losses, then there's something greater at hand. There is possibly you're suffering with something dealing with more of a psychological standpoint. Because if you're into a trade and you allowing the market to come back against you, then it could be fear, it could be greed. More so it's greed, because you think that you want the market to go to some particular area of target, okay? And you're weathering the storm, but all you're doing is digging a deeper hole for yourself, because you're looking out and you're saying that I want something, I want more. And the market's not going to give you no more. When it starts to come back, it's better to go ahead and cut the loss early and get out the trade, even if it goes back in your direction. A lot of times you can actually get back into a trade if you just simply wait. Okay, so let's say you're in a trade and it's moving in your direction, and it comes back, and then you get out the trade, all right? And you say, wow, I should have stayed in the trade because now it's moving in my direction. A lot of times the market will give you a second chance. It's better to look for that second opportunity versus allowing it to just, you know, when it starts to come back and you stay in the trade and you start digging a hole deeper and deeper. cut the trade early. See if it's then going to set up for another opportunity. If it doesn't, just don't take it. If you miss the opportunity, say for example, if it gives you a second opportunity and it moves in your direction, no sweat. You shouldn't worry about it. Yeah, I mean, we all think about things or look at it in hindsight where, after a trade took played out, okay? We've all seen that. But it's all about preserving capital so we can trade again. All right? Not every trade is going to work out. Retail traders, we don't how I want to say this, we don't control the markets. We have nothing to do with the direction of which way the market is going to move. We have to play the game accordingly with the banks and institutions. We want to, they're leaving footprints on the charts, and it's up to us to see which zones or levels to take trades from. Okay. Now, if you don't trade supply and demand, that's fine. But I'm specifically talking about trading supply and demand here, looking for opportunities of aggressive buying and selling. I'm not specifically trying to get on the charts today because I do that so often. This is just a one-to-one or me to you type discussion here because I see this all the time. People getting frustrated or complaining about blown accounts and not being able to cut their losses. What is it that's standing in your way? You have to figure that out. You have to look at yourself in the mirror. Can't nobody give you the answer because it may be something you're struggling with that no one else knows. Someone can show you and give you some examples of things to do, all right, or some solutions, but it may not, one of those may not be what you're struggling with. So when I hear people say I can't cut my losses, what do you mean you can't cut your losses? That's something that I just can't wrap my head around because I mean that's not an answer. There's the solution is getting out the trade, knowing when to get out the trade. I talk about this, I say this all the time. Size the market up before you even take the trade. How much opportunity or room. If you have a certain target profit or profit area you're looking the market to go to, then that's called sizing the market up before you get into the trade. Where you can place your stop loss at, and also where you're going to take profit at. Determine if it makes sense, that zone you're looking to take the trade from, to take the trade. Okay? Is there a major area of support or resistance that's right above you in which the market can bounce off of? Is there a half or round number? That's something I'm going to talk about here in a second, that the market could bounce off of. A lot of people, they don't pay a close attention and they really don't know about, like, say, half numbers. I mean, half numbers are just the numbers in between, say, if it was 500 and 600 level, say 18,500, 18,600, then it would be 18,550. That's a half number. All half numbers or round numbers, you have to pay attention to those as well because the market can pause, reject, bounce when it gets to those levels, or it could be a round number, 500, 600, 700, whatever it may be, or something lower than that, moving to the downside. So half numbers and round numbers are important too. So you have to size the market up and look to see when there's a zone that you have or are interested in taking a trade from. Know where to place your stop loss at so you don't, for one, take any major drawdown. Now, if you're trading from, trying to swing trade or position trade from higher time frame or higher base charts, look, I don't swing or position style trade. Allow putting a trade on for a period of time. Sometimes the market is sluggish. And typically I like to see momentum quickly come into the market when I'm in a position. And if it starts to just kind of play out for, I'm not going to put a certain time limit, 10, 15, 20 minutes. But if it starts to not move in my direction quick enough, then I'll get out the trade because, the market could come back against me. But you have to know when to get out of the trade. That's what I talked about yesterday. If the market's moving in a certain direction, momentum's good to the upside, and then all of a sudden it folds back and I get, say, so if I'm in a position and the market's moving to the upside and then it starts to fold back where we get multiple, say, bearish candles, the first bearish candle, then the closure of a second bearish candle. If I'm up in profit, I want to close the position out because it may be trying to fold back to the downside. And sometimes it'll keep pushing to the upside, but that's how the market moves. It ebbs and flows. But you have to it's one of those things you can't just like tell someone specifically how they should do things. I mean, because you don't want to do that. I don't do that. I just tell people, I show them how I do it. And when I'm in a trade, I like to, as the market's moving higher, making higher highs and higher lows, I typically like to put my stop or trail behind the market or price. Each time it makes a new higher low, I like to move it at that last higher low that the market made. That way that's secure and locking in profit. A lot of people, they'll just, the market will come back against them. They'll say, oh, it's coming back down to my break even point. And it's like, you could be up like, 15, 20 points, and then it comes all the way back down to your break-even point, and you didn't lock in any profit. All right, taking most of the majority of your contracts out is a good thing to do. And maybe you have a runner. Maybe you've taken out, let's say you're in 3 contracts, you're taking out 2 contracts when the market was moving in your direction, and you decided to let the last contract kind of do its thing. Maybe you kept it back at break even, but you still want to be able to scale behind price, moving that last contract up. If it stops you out, it stops you out. But don't let it come back that far against you to where it starts breaking, below your break-even point and really stopping you out. So you have to know when to get out the markets. What I'm trying to say, we don't control the markets. We don't know fully what it's going to do all the times. Trading is all about speculation, and you have to understand that this is the most riskiest thing that a person can do in life, because you have money tied to this, and you have to have a certain level of skill set and a level of experience to know what you're doing. But sitting in a trade and not cutting your losses early enough, I don't even know how to answer that, because that's a personal, more of a psychological, that's a personal problem that you have if you're doing so. Anyone out there watching this, because you got to figure out what it is that you're doing. What is it that you're doing wrong, and why are you staying in that trade that long enough when you see it coming back against you? There's something that's not that you're not doing correctly, to allow yourself to sit into drawdown with hopes, dreams that the market's going to turn back around. You can hope all you want to, but most times the market's not turning back around. At some point it may, but you got to understand too, they're probably going to run an area of liquidity or several areas of liquidity before they turn the market, before it starts going back in that same direction. We just trade what we see based on setups, and we be patient to wait and take high probability setups based on certain zones. Just like when I trade supply and demand, I'm looking for good high probability zones to trade from, but I'm also paying attention to areas. Let's say, for example, if the market was moving higher, was making higher highs and higher lows, breaking structure to the upside, and there was for example, an area of supply, a good area of supply resting below another area of supply that was above. So I don't know. Let's say, for example, I'll just show you here the charts right quick. Just in reference, the market's is moving higher here. Okay, there's a supply zone. A demand zone here, and there's a zone right here. Right. Well, this could be an area of structure where the market could break, all right, to grab liquidity to come down here and test this area down here and then move back to the upside. So, you just have to know kind of, what's going on at certain levels, looking for the full on rejection. That's why rejection and looking for the confirmation to take the trade, if we're going long, back to the upside is very, very important. Don't just ever jump into a trade just when the moment it comes back to a zone. Make sure that you're getting and receiving rejection, off your lower time frame. That's why I like to mark my zones off a higher base chart, or if you trade, time based charts or ticker volume, whatever chart styles, whatever charts you trade from. I like to mark my zones off of a higher base chart and then move down to a lower time frame. Moving down to that lower time frame, like I explained, allows you to get into more of a precise entry point where you're not taking a trade specifically off that higher base chart, because there could be a lot of swing and movement back at a higher base zone. That's why the lower base or charts, when we start scaling down, we're looking for that rejection. That rejection is for the market. If we're moving to the upside and we're looking for we mark a zone of demand off of a higher base chart, we're looking for a demand set up on a lower base chart, and you have to wait patiently for that to unfold too. So, but you should never be just sitting there riding a trade out. If it starts to come back against you, sitting in it, cut the loss. Don't sit in it. Because man, if you're doing that, you will continuously blow accounts. You've got to figure out what it is and why you're doing that. No one can give you the answer other than when I see people say, I keep blowing accounts, you have to figure out what it is you're struggling with, what it is that you're doing. And no one can really help you out there other than say, stop, pretty much, what are you doing? Revenge trading? You get into a trade, you take a loss, and you're back into a trade again? Or are you trading too much? Are you not being patient enough and looking for the right or good zones or levels to trade from? You have to identify where the problem is coming from. Are you really not looking out to see what the overall direction, like I said at the beginning of the video, really is? If we're bullish to the upside, why are you trading going short? Unless you really know what you're doing and have the experience. Again, you can do counter trend trading, but if I was someone that was a beginner trader and I haven't reached a certain level of consistency yet, I wouldn't do that. I would trade and wait for great high probability demand setups if we're pushing to the upside overall. Okay. Now, when it comes to like half number round numbers, you have to understand that too. You could be a beautiful trade to the upside. Let's say, for example, this trade right here. Okay. Let's say this was a demand zone, and which it is. Okay. So this was right at around close to the 400 round number. Round number. Okay. But if you look up here, there is the 50 area sitting right up here. There's a half number up here. So the market you could get in this trade here, but you also have to be mindful that there's a half number up here, because the market could get up here this half number and reject and bounce and then push lower. They love to trade. I mean, the market loves to bounce at half and round numbers. Understand that. And there's also hidden pivot levels, which a lot of traders don't know about, like the 40 and 70 level. If you pay attention to the 40 and 70 price levels, you'll see a lot of times where the market, you may get to a trade, it may hit 40 and then it bounce or reject, and you're like, well, why did it do that? It didn't even hit an area of support. Support or resistance, or it could be the 70 level. That's because it's that, what's called a hidden pivot level. A lot of traders don't know about that. I've been trading long enough to know that 40 and 70 are good areas to where the market, where the market loves to bounce at, or loves to reject those areas. I'm not saying it's going to like hit those areas and then totally start reversing, but they love to bounce at those areas. The markets are, designed to trick traders out, to fake you out, because the end all goal is for you to lose money. It's not designed for us to win at all. So, it's designed for us to lose at any given point. That's why I trade supply and demand, because I could look at the chart and I can say, oh, the banks made this move here. The institutions made this move here. I'm going to be smart and wait for them to come back there, because they just made an aggressive move right here to the upside right here. A lot of buying, and comes back to this zone right here. Look for something to happen. But I'm also paying attention that there's 50 up here. There's 450 right up here, where it could come up here and reject right at this high up here. You have to understand that, okay? But you can also use like the 40, the 70, the half number, round numbers. If the market pulls back to a key area of demand and supply on your charts, right? And you have a zone you mark, and it pulls back, and you also realize, oh, it's at the 50 area too, or a round number back at that demand or supply zone you're marking. Guess what? That's more confluence. And that's what trading is about. It's the more confluence we get. I talk about that plenty of times. The more confluence we can receive or we get at a zone that we have marked on our chart, it just gives us more probability that the trade can work out in our favor. For sure. Definitely so. You have to understand that. Let's say, for example, like right here, this is the 500 area right here at this supply level right here. Okay, this was aggressive selling to the downside. We broke an area structure lower right here. Pull us back to this area right here. This is a supply area, and a round number area. Okay, so that's confluence right there. We got a level, we got a supply area, we got a round number level right there, and we look, and also there's a void and gap back at the zone, which is part in my trading strategy. What I like to see, with the market move quickly away from an area, creating an area of supply. In this example here, we broke structure to the downside, and we had that gap or zone. So we've got multiple means of confirmation here. The more confirmation we receive, the better off the trade is going to work in our direction. All right, so if you look at this area right here, now we did close and break into the zone right here. You see here, this is a breaker structure, small area of there's the supply right here. The market retraces back to it. So we have a supply area, but look, it's the 70 area too, the 70 level. So more confirmation there. We got the a gap right here, back right here back to the zone. Market retraces back to the zone. So we got the 70 area or level. We got a supply area. We got the gap. It gets back to this area. You move down to a lower time frame. You can look for opportunity to go short, and look where it does. It runs the low. Okay, it runs the low and pushes lower on down. So pay close attention to the half number and round numbers in reference to if it's going to give you more confluence back at a level or zone, or if you're into a trade and you have, say, a round number level right above you, you may want to think about getting out of that trade, because it could definitely halt, bounce, and pull back on you right there, or a half number. So pay attention to certain levels, especially I would pay attention to those half and round numbers. Okay. But that's all I want to share with you with you guys today. Again, if you're struggling with cutting losses, you really have to figure out what it is. I would definitely watch the video that I posted yesterday. It shows clearly examples a very good example of, where how I trade in reference to where I place stop losses at, and I also talk about, the market coming back, what to kind of look for. If it starts to break back in the opposite direction when you're into a trade and it's starting to close with multiple candles to the downside, well, that's a shift in momentum. You have to understand that. If we're bullish and then we start to shift or pull back and we start getting multiple bearish candles, that's a momentum shift or bearish shift back to the downside. And it can be temporarily, but still, lock in your capital, lock in your profit, take your profit. Don't allow it to come back all the way to your break even and then start breaking below your break even point and then watch your stop and push past, it stops you out, whatever the case is. And you took on some major loss. Cut your losses early. That is engaging in and practicing proper risk management. But that's all I want to share with you guys, okay? I really do. I hope everyone is having a great weekend. Appreciate everyone tuning in, watching the videos. If you're not a current subscriber, currently it's your first time watching the video, maybe you came across it somehow, I have tons of videos where I go over the strategy here on the channel. Great topic or great conversations of information that I share here on the channel as well. So I highly recommend you becoming a subscriber to the channel by clicking the sub button down below, and make sure you turn on all your post notifications so you never miss one of the uploads here on the channel. If you want to receive a couple of things, we have a Discord community, all right, and it's a great community where we share trades as traders. It's a channel on the server titled The Trading Floor. You can come over, you can join it. The Discord is free. You can find the link down in the description portion of the video. Click on, that link and invite yourself in. It's free. There's a channel on there called the Trading Floor, and that's where we as traders come together. Or if you want to post your entries or your trades that you actually take, I post and share with the community trades that I've taken. It's also an area of opportunity where people can ask and question, why'd you take that trade? They can send a message, and like myself, I'll respond back and let people know why I took a specific trade. But again, I trade 98% of the time in supply and demand, so that's the kind of setups that I'm looking for. But again, the Discord is free. If you are interested in becoming an elite member, because people always ask me, and I always say in videos, it's $6.99 a month, and what you receive is the trade breakdowns. That's where I post private videos to where you can receive additional content where I spend great detail in breaking down the trades that I do take and talk about them in discussion of why I took those trades. So basically, I'm walking through my mindset of leading up to me taking a trade, and talking about where my target is going to be at and why I took that trade, and where to get out if it comes back against you, where to place your stop loss and things like that, so you can grasp and understanding more so about supply and demand setups that I take. So I thank everyone that has signed up, each individual that has signed up. I really appreciate you supporting me as a content creator, and that's what it is all about. So the elite, if you want to become an elite channel member, there's a link right below the Discord link in the description portion of the video. You click on that, 2 tiers will pop up. Make sure to choose the one that says Elite Channel Supporter for $6.99, and you'll be able to gain access to those trade breakdown videos and that video playlist, which is part of the perk and rewards that you receive. But that's through the YouTube tier program or platform that allows supporters or members that are part of a community here, that are subscribers, to support the efforts of a content creator. And that's exactly what you're doing, is support me as a content creator. And I'm giving something back in reference to the support. Okay, so that, again, that's the trade breakdowns, the video playlist. You get the emojis, the badges, and the priority reply to comments. So I thank you for all those who currently support the efforts of my making this valuable content. But last but not least, if you found value in today's video, please drop a like on the video. I really appreciate it. But that's it. I'm wrapping it up. I hope everyone has or is having a great weekend, and I'll see you in the next video. Take care. Yeah, so let's watch today's